Look, the one thing that the SEC was arguing most vociferously was this idea that XRP, the digital asset that Ripple uses in our technology, was a security. And that was really what they cared about. And what the judge ruled is that XRP is not a security. And that's really been a formative case for the industry. So we're going to continue really clamoring and trying to champion the clarity of regulation. And I'm hopeful that as we see a changing of the guard, we'll see that.
Sorry, just to clarify, though, I mean, was the ruling, though, it did make a distinction between institutional investors and retail investors, did it not?
What it said actually is that just like if you package up real estate or you package up even pork bellies, if you put those into an investment contract, the investment contract is a security.
Gotcha.
But the ruling was very clear that no matter what, XRP in and of itself is not a security.
Look, I'm going to start by saying it's shocking to me as a kid who grew up in Kansas that somehow a technology like this has become a partisan issue. Why would we have a Republican versus Democrat dynamic around innovation? Like, we should want technology that reduces cost, improves efficiency. The fact that this became partisan, I think really, the patient zero on that is Elizabeth Warren, who uses as a campaign talking point that all crypto is used for bad acts and et cetera, which is absolutely provably not the case. But now you have, in a somewhat crazy way, a dynamic where the Republicans are pro-crypto and a bunch of Democrats are anti-crypto. I'll give credit to a Fortune reporter who's one of the first people I saw tweet out, this is JJR, Jeff John Roberts, tweeted out that Biden will gain 0 votes for being anti-crypto, and Trump will gain tens of thousands, I don't know what he said exactly, but many votes for being pro-crypto. I agree with that tweet, and it makes no sense to me. And there are leading Democrats who I think are trying to solve this and leading in. I was at a crypto roundtable in Washington, D.C., led by a California rep named Ro Khanna, Mark Cuban. It was about 25 people. Anita Dunn, in a personal capacity, who works directly for Joe Biden, was in the group, as was Mark Cuban, the senator from New York, Gillibrand. So look, I think there's some leading Democrats recognizing that maybe got this wrong. I was sitting next to a different representative, who I'll leave unnamed, who said that he was there largely to do a mea culpa. He's like, I got this wrong, and I had looked at this the wrong way. And I do think it's because people believe the bullshit. They have people espousing things that just are plainly not true, and they believe it, and they have to learn for themselves how crypto is really being used. There's a lot of very good actors in this space that are trying to follow the rules of the road, and we've been asking for 5 years, give us clear rules of the road. And so I'm hopeful that eventually this will become a nonpartisan issue, but right now it is partisan, and I think the Republicans are playing chess where the Democrats are playing checkers.
Right. Dave, Ether ETFs, spot Ether, we're expecting, we have not gotten a word, but we are expecting approval soon, likely to begin trading next Tuesday, next potentially. Week, the spot Bitcoin ETFs, by any measure, have been a success. Inflows have been, I think, generally better than expected. Ether is a much smaller product in terms of assets under management than Bitcoin. What are we expecting?
My opening bid here is that we'll get about a tenth of the AUM at the end of the day. So give it a 6-month run. I think we'll look at this and we'll say the ETH funds have about 10% of what's in the Bitcoin funds. That makes sense to me. Bitcoin's a store of value. It's a very different kind of story. ETH is a utility, effectively. It's like buying RBOB. You're buying gas for the crypto economy. And so it's a very narrow play on how crypto gets used to rebuild a new decentralized finance world. If you're a believer in that, the ETFs are going to be a great way to play that. But I think that it's a cascading level of interest from there, right? If a Solana ETF comes next, I think it's going to be an even smaller allocation. So I think we'll see more folks do what State Street SSGA has been doing, which is partnering with folks to figure out ways to do active management in this space, to put these into portfolios, to put them in context, in other words, to make them less of a speculating vehicle and more of an investable asset.
Yes. Do you have a strategy here? What's your thoughts on your way of participating in this, if any?
Yeah, Bob, I'm a big believer in digital assets. I think that whether we like it or we hate it, we have to pay attention because this is where the money is going, this is where investors are, and I think that digital assets are going to really change the financial industry in the next 10 years. But I'm not excited about single cryptocurrency because the space is crowded. I'm not going to launch Bitcoin number 12 or number 13 or Ether number 6 or number 7. That's not exciting to me. But what's exciting to me is digital asset 2.0. What is the next version? How do we use all of these single components in active strategies to build a portfolio? And that's why we partnered with Galaxy Capital, because we think that the expertise lies with crypto natives. We bring the best of what we do with ETFs. They bring their knowledge when it comes to digital assets. That's 2.6, a number of portfolios with us. So we will actually use their intellectual capital to build the solution-oriented portfolios. It's not going to be about the Bitcoin. It's not going to be about Ether. It's going to be the entire digital assets ecosystem. How do these currencies play a role in a portfolio? How do we hedge those currencies? If people like Bitcoin but they don't like the volatility, how do we hedge the volatility within a portfolio?
Interesting way to do this.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And guys, make sure you go like and follow the TikTok. And don't forget to send me the suggestions on the blockchain gaming that's play to earn. But guys, we have Brad Garlinghouse. Speaking of the digital asset technology, it shouldn't be Democrats versus Republicans. But guys, we know they have to play the Hegelian dialectic because crypto is for the machines. It's not for you. Crypto means hidden message, hidden meaning. They know these crypto assets are going to enable the machines to take over the economy, which is going to put majority of people out of work. So you have to have a group for it and against it. And once all this technology go in, then you're going to have that side go, hey, we told you so. And that's the reason why the Hegelian dialectic is undefeated. And we have the spot Ethereum ETF is definitely coming in the next few weeks. And we have Anna Paglia, which has a great accent. It reminds me of the little midget that used to be on the Paradise Island. But she states these digital assets are coming and it will change the financial industry. And she's exactly right. She's not worried about just one, Bitcoin or Ethereum. She's worried about the whole ecosystem, and everybody needs to be paying attention to that. And that's the reason why I have the NWO crypto, so therefore you can see the whole ecosystem. And then we have the data centers using all this energy. Remember, guys, what Bitcoin uses too much energy, the climate agenda. They need to change it. Now the data centers are coming and you heard nothing about the climate agenda. Again, because it's all the Hegelian dialectic. That's the only way you can move in this fourth industrial revolution. And we have the big banks too big to fail. And these banks are getting bigger and bigger. And that's all you're going to have is consolidation. These small and medium-sized banks are going to get swallowed up. Because remember, in the fourth industrial revolution, it's all about liquidity. And Basel III capital requirements are going to benefit nothing but the big banks. And they're not hiding it anymore. They're telling you the truth. These banks are going to get bigger and bigger. And we know the banks are the biggest what? I'll let you finish that. And we have the small cap stocks finally getting a pump, but we know it's nothing but an algorithm moving this money from these big tech stocks over to the small caps. Guys, this is going to be temporary. And remember, the crypto teacher told you. And we have universal basic income, universal high income, whatever you want to call it, is right around the corner. Because we know Social Security is bankrupt. We know these pensions are bankrupt. But because they're going to be tokenized in this debt, they'll be able to hand out free money. But little do the people know that free money is going to be programmable, telling you what, when, and how to buy. And you have 3 to 6 months to spend it, or poof, it's gone. And remember, the crypto teacher told you. Because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Demand to power artificial intelligence applications is soaring. A New Jersey-based startup, CoreWeave, is rapidly building data centers across the United States and Europe. Joining us right now in an exclusive interview to talk about it is Mike Intrator. And I would actually even throw into this the energy it takes to power these things?
Yeah, so first of all, thank you for having me. I appreciate the opportunity to speak to you and the audience. In no particular order, the market that we are seeing, and we are very close to the true demand for this infrastructure, is relentless. It has been in a state of severe disequilibrium for the past 2.5 years. And in our planning and in the planning that we are being driven to do by our clients, there is quite a bit of runway still in terms of what the build is going to look like.
You're in the business. You probably knew what happened over the last 3 months or had a pretty good idea. But after having seen some of the major banks, did anything surprise you? Anything better than you thought? Anything worse than you thought?
It's kind of a normalized environment, Joe. I think, just to your point, I think earnings were quite strong. I think the underlying fundamentals for the larger banks in the U.S.
Fundamental, I really like that. That should be a word. That's a portmanteau, the underlying fundamental.
You gotta invent one new word each time you come on.
That's really good, Bob. I'm gonna start using that. So it was mostly in line with your expectations. So then highlight what is going. So did you see J.P. Morgan's worth $600 billion?
Yeah.
I mean, it's never been there before.
Listen, the larger, the big four U.S. banks continue to get larger, more concentrated, and I think the real issue, it was interesting to see the discussion around Goldman's earnings, which to me looked fantastic. The concern was 11% ROE, and looking back to 99 and the public issue, and kind of 25 to 30% returns. And the truth is, they're much larger, they're more concentrated, they're more like utilities, the big four banks. They carry much, much higher capital levels. And we're not going to see returns like we saw in the 90s and the 2000s. I think 10 to 15% more utility-like returns. The banks are safe. They're really, it's a bit of an oligopoly for the big four from a deposit point of view. Earnings are strong, but they're going to be 10 to 15%. They're not going to be 20 to 30%.
Do we need stricter capital requirements, whatever it's called, Basel? Do we need that? Will it ever become
I think required? We really do, given that the larger banks are becoming larger and more concentrated, and everyone says they're safe, nothing bad can happen, but look what happened to Credit Suisse. And look what's happening within Switzerland now, where there's really one mega bank, and there's a lot of concern. Not that UBS isn't performing well, they're performing really well, but what if something went wrong? And so I think the larger capital levels, Joe, are here to stay. And I'll say this, we're very focused on the regional and community banks. We think there's a huge opportunity there. We think it's really good for the U.S. economy and the U.S. financial services industry. And we think there's going to be consolidation. And I think that's where an investor can see good returns over the next couple of years, even better returns than the large banks.
All right, welcome back, everybody. We were just talking about it. Small cap stocks, one of the hottest trades in the market right now. The Russell 2000 index jumped 3.5% yesterday, hitting its highest levels since January of 2022. It's up more than 10% just in the last week, and that is the biggest rally we've seen over a 5-day period, going all the way back for about 4 years now. Joining us right now to talk more about it is Chris Retzler, Needham Small Cap Growth Fund Portfolio Manager. And Chris, what's the genesis? I mean, this is kind of a shift that we've been waiting for quite some time.
As a small cap manager, I've certainly been waiting for a few years here. We're getting to lower inflation, which is really positive for the expectation of lower interest rates. When that happens, I don't know. But I think what Powell's comments were a couple of months ago was his next move was down, not up. And I think that really was a signal that small caps should begin to work, and we've been able to see that since then. The move the last couple weeks has been very nice. Obviously, small caps are volatile. They don't go up forever. But I think longer term, we're in a cycle that's pretty good for a lot of those companies that have suffered, have underperformed versus a lot of the large cap companies. So we're seeing a broadening of the market. I think that's good for the economy. I think it's good for the country that the small caps are beginning to see some attention.
So the small caps are up 12.8% over the last month. FundStrat's Tom Lee says he thinks this is just the beginning. He said he thinks they could be up 40% over the next couple of months. You agree with that?
It's certainly possible. Small caps are very liquid, and as money flows in there out of the large caps as it comes out, it doesn't take a lot of money to push those stock prices higher, get multiple expansion in an expectation of lower interest rates, say, over the next 12 months. I think that's very good for the companies. Lower cost of capital that has weighed on companies. They've been able to fix a lot of their inventory issues post-COVID, and that took a longer time because the economy was slowing. I think the economy is still going to continue to slow, but I think we're getting to that, a horizon where it should be a better environment for small caps. And obviously the market prices 6-9 months out, and I think we're beginning to see that.
So, Republicans have been talking about debt and deficits in this country for a very, very long time, and they have oftentimes put that front and center in terms of the rhetoric in the conversation, and yet part of the conversation appears, based on what President Trump told Bloomberg Business Week, is this idea that he wants to lower corporate taxes to 15%. I don't know where you think the individual tax rate goes. And the question is, if you're doing those things and you're not going to really deal with the other side of the balance sheet, which he doesn't seem to want to do, where that leaves you.
Yeah, I couldn't agree with you more. That's a problem. But it's a problem for Democrats. It's been a problem for Republicans. No one wants to talk about debt and deficit, but it is extremely real. The only answer is to cut spending and to get rid of a lot of this discretionary spending, to bring certain aspects of the budget under control, which is very doable. The big thing I also push with when I talk about the political implications, Medicare and Social Security. These things are going bankrupt. This is a reality. It is happening. And every day we get closer and closer to that 8 and 10 year threshold when these things go bankrupt. The fear is that Congress will do what they always do, kick the can down the road, not be proactive, only react in a crisis 8 years from now and bring us a bad solution. So as good as Donald Trump is on a lot of issues, I hope he brings in an economic team that says, look, you got to deal with this stuff today to get the best solution possible for the future.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Sonali Basak. Sonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.